G'day folks, welcome back to Pete's Investing. It's April 12, 2024. This is the market update for currencies Aussie New Zealand, New Zealand CAD, US Canadian and US Japanese yen. Watch for those retraces on a couple of these charts and I'll go through those in particular. Again, for our heat map, today we're looking at Aussie New Zealand, so it's monthly, weekly, it's long or bullish, and on the daily it's turned into a bearish scenario. On the New Zealand CAD, it's bearish across the board on monthly, weekly, but it's bullish on the daily. And US Canadian and US Japanese yen, it's bullish across the board. I'll give you a couple of ideas how to trade that as well. So first off, on the Aussie New Zealand, on the daily, it's zooming out. Remember, on the Aussie New Zealand, we're long on the monthly and weekly and short on the daily. So you can see there, first off, short on the daily means I look at the CCI 150, you can see that it's broken down below that moving average band. That's a bearish outlook on the daily. And on the weekly and monthly, let me show you the weekly first off. This is how I measure the bullish or bearishness. You can see there it's on above the moving average band. So that's bullish on the weekly and bullish on the monthly. So going back to the daily for a minute. Okay, zooming out first off, you look at the stochastic market forecast as well. That's bullish on that's above the 50, which is giving you some level of bullishness. But again, we use the CCI 150 as our main trend indicator. On the hourly, it's in the overbought territory, and it's actually broken down past the 90 level. So we may see a bit of a retrace further than what it's already doing. Now, if I zoom into both of these, you'll see here I've got the key resistance up here at 11425, and then another minor resistance here at 110421. It looks like it may be reaching this minor resistance in the near term on the daily, although it's pulled back and it's giving us a bearish signal at the moment, so it may have already run out of steam. On the hourly, there's no divergence there, by the way. We did have a bullish divergence here, higher lows versus lower lows on the price. It bounced from there and went well beyond the 100% level. If you draw a Fibonacci between that Fibonacci range, it went well beyond 100% level. On the hourly, we have a lot more volatility. You can see there, we've got a bullish divergence there versus lower lows on the price. A bearish divergence there versus higher highs on the price. Bounced down, just touched our target area there. Another bearish divergence here, broke down. You can see there it's hit out within our target range, and it looks like it's bouncing off that 38% level. And for those relatively new to the channel, I'll take it back to the previous low. It would have been actually not that one there, hang on. If I take it up to that point, the recent low before that divergence started, that was a 38% level. You can see there it's bouncing off that 38% level in this case. Now, the CCI is moving in line with the price, higher lows, so no divergence. So just bear that in mind. So again, on the Aussie New Zealand, it's bullish on the monthly, bullish on the weekly, but it's broken down into a bearish outlook. I would avoid trading. This is assuming you can trade on the lower time frames, like 1 hour, 2 hours, etc. I would avoid trading unless we see the weekly, especially the weekly and the daily, in alignment. At the moment, the weekly is long and the daily is short or bearish. So I'd like to wait for the daily to break above bullishness to be more positive about going long. Alternatively, if this keeps falling, I'd like to see the weekly also turn bearish as well. Now, next we're looking at the New Zealand Canadian dollar. So New Zealand CAD, on the monthly and weekly, we're bearish. On the daily, we're showing bullish movement. So this is the opposite to the Aussie New Zealand. So New Zealand CAD is broken up past the moving average band. If I zoom out, you can see there it's still below the 50 level, so it's still relatively bearish on this stochastic market forecast indicator. We need to see it break a lot more higher than this 50 level to be a lot more bullish, in which case we'll probably see it break into a bullish movement as well on the weekly if that happens. But at the moment, it's bearish on the weekly and bearish on the monthly. And again, zooming in, also on the hourly, before I go there, you can see there it's bounced off the oversold, touched the 50 level, and it's sort of deciding whether it should keep going higher or retrace back to the downside. So again, I'd like to see this break a lot higher on the weekly and the monthly to be more bullish, but at the moment it is in a bullish movement on the daily. There was no divergence back here. On the hourly chart though, you can see there we've got a bearish divergence, lower highs versus higher highs on the price. We drew a Fibonacci range in that range, and that's how hit our target 23-38% level. So just be aware of that. You can see that's bounced off 38% level, and it's making some further declines on the hourly. It's moving more to the downside. The CCI 150 I use primarily as a trend indicator on the monthly, weekly, and daily, but they can also be used as divergence indicators on the higher time frames. But they're especially useful for lower time frame divergence. They're a lot more volatile and showing a lot more divergence generally. US Canadian dollar, it's bullish across the board, monthly, weekly, and daily. And here you can see on the daily, it's above its moving average band. So it's moving nice and strongly. Now, if I draw a Fibonacci between that range, you can see there it's broken up. It's sort of hesitated near the 61% level, and that's a key area to look out for. And it's actually broken up through there. It doesn't mean it's going to continue up, but it's a good sign it will, or it may do so, probability. Never a guarantee, of course. But it's actually broken up through that 61%. We may see further upside at the moment. So looking nice and bullish on the daily at least. If I zoom out on this one, you can see there it's already broken above the 50 level on the Stochastic Market Forecast indicator. So again, no divergence to talk of on the daily chart. On the hourly, if I zoom out, you can see there it's hovering around the overbought territory, so we may see a bit of a retrace to the downside. It was hovering in this channel for some time, for a number of months actually, and it finally broke outside of that channel. But you can see there it's actually gravitating back towards that ascending diagonal trend line. And if I zoom in, you can see there we've got lower highs on the CCI 150 versus higher highs on the price. And if I drew let's go back to that low there, you can see there it's already touched that 23% and bounced off it. I don't trade these divergence. I generally look at them as a area to get out of a trade. So if I'm going long in this case, for example, that gives me an idea that, okay, it's going to start to weaken, so you may want to take your profits and get out of the trade. So I don't trade them in that. I only trade them to take profits generally. Next, we look at the US Japanese yen. So again, you can see there is a bearish divergence back here, which executed quite nicely. They do occur on the larger time frames, as I said, including the monthly and the weekly. Now, the monthly, weekly, and daily are all bullish. You can see there the CCI 150 is broken above the moving average band, so it's a bullish movement, and that's the same with the monthly and the weekly. So bullish trade should only be taken. Let's look at the hourly. And I like to look at the hourly because it's a lot more volatility and shows us more potential divergence. So again, if you're going long already and you're holding this, you may want to take your profits. You can see here the CCI 150 is dropping versus higher highs on the price, and at the very least, we can expect it, assuming it starts pulling back now from this point. It could go higher, of course, in which case we'd have to extend this Fibonacci range. So long as the CCI 150 remains below that high, we're going to consider this a bearish divergence. So assuming it starts pulling back now, we're going to see a pullback around the 23-38% level. So again, I use this as a way of taking profits if I'm already in the trade. So you would have been in a trade somewhere here, going long, and as a trading idea, remember, we look at preferably monthly, weekly, and daily are all trading above the moving average band, and that's where you take trades on the lower time frames as well. So you would have been wise to take trades going long at that point there when it broke above on the CCI 150 on that moving average band, holding it there and closing out the trade when it broke into that moving average band. Now, in this case, the price did go slightly higher, but again, don't get greedy. If you would have made a nice little gain in that little trade. Get out of the trade and take your profits and wait for a further upside. So if this started breaking above on the moving average band, just be careful, it is declining. So we'd like to see it break higher, and it did actually broke above this resistance at 151.90, so we may see further upside. So again, wait for that to break above the moving average band to be more bullish. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.